Hello everyone, this is Oscar. In this video, I'm going to talk about the summary operating statement, franchise fee, and management fee. The summary operating statement is very similar as the income statement we learned from other accounting classes. However, summary operating statement is only used for hotel companies because the numbers displayed in the summary operating statement is more hotel friendly and can be easily used to evaluate a hotel performance. In addition, the summary operating statement can be also used to calculate the franchise fee and management fee. So for this reason, I'm going to combine these three topics together in this short video. This is the basic structure of a summary operating statement. So as we can tell from the topic, the summary operating statement. This statement heavily focuses on the operating activities. Right? That's why it is called summary operating statement. So in the first part of the statement, we focus on the performance from each operating department, or in other words, we focus on the performance at the operating department level. And then in the second part, we look at the performance in the hotel level by considering the undistributed operating expenses. And after that, we further make some adjustment, and then we will get our net operating income, or in other words, we call it EBITDA, net operating income. So let's talk about each part briefly. So in the first part, we considering the revenues and expenses generated from different operating departments, such as rooms department and food and beverage department. And then we subtract the expenses from the revenue, and we can calculate the departmental profit. So this department profit is especially useful for the department directors or department managers, because they can know, okay, how much revenue or how much profit we made from our department. And after that, we considering the undistributed operating expenses, such as the sales and marketing, right? Administrative expenses, utility, maintenance, so all these undistributed operating expenses. And after that, we can calculate. We use the departmental profit, subtract the undistributed operating expenses, we can get the gross profit, GOP. And the GOP is very useful for the general managers, because it reflects the hotel's performance at the hotel level. So after we get the gross operating profit, GOP, we need to make some adjustment to calculate, to get a more accurate net operating income. Okay, in this case, we consider the management fee. We also consider the income from other sources, or from non-operating sources. So here we consider the income and the expenses, right? So some non-operating income examples are the income we get from the disposal of fixed assets, like we mentioned in the balance sheet lesson. Some other examples are the income or the gain we get from some short-term investment. For example, we sold some stock we hold. Right? All of these are non-operating income, because these income are not directly related to our hotel operations. And some non-operating expenses are, for example, rent, property taxes, insurance. All these expenses are fixed expenses, right? They are not directly associated with the hotel operations. In other words, we have to pay these expenses anyway, whether we operate or we don't operate the hotels. So after considering these non-operating income and expenses, we can get the EBITDA, or in other words, the net operating income. So what is EBITDA? EBITDA refers to earnings before interest, taxes, depreciation, and amortization. Okay, EBITDA. It reflects the net operating income generated by a hotel. So this is a very important number for a hotel operators. So here I want to briefly talk about what is the difference between depreciation and amortization. Depreciation refers to the depreciated value for a tangible asset, such as building, furniture, or equipment. In contrast, amortization refers to the depreciated value for an intangible asset. So that's the main difference between depreciation and amortization. A summary operating statement can be very useful for both operators and owners. But the statements are in slightly different format for each statement users. So in these slides, it shows the statement structure for operators. Okay, the first part of the statement is the same. The only difference is the items highlighted in red. After we get our EBITDA for operators, we look at the replacement reserve, which is the income we reserved for maintenance or replace some equipment or assets we used in a hotel. Okay, so we reserve a portion of the income, and then we get the EBITDA less replacement reserve, or we call it adjusted net operating income. So this is the baseline numbers for a summary operating statement used for hotel operators. So in these slides, it shows the statement used for owners. So as you can see, the first part is the same, right? So once we get the EBITDA for hotel owners, we further considering the interest, depreciation, amortization, and taxes, right? So in other words, we consider after EBITDA, we consider the I, T, D, and A, and then we can get the bottom line number, net income. So which is the most important number for hotel owners. Okay, because hotel owners, they care more about how much of the net income we made from last period. So we have talked about the summary operating statement, right? So it's not only used by the operators and owners. It can be also used for calculating franchise fees and management fees. Now let's take a look of the franchise fee. A lot of time a hotel is not operated by using their own hotel names. Instead, they are using some other brand names, such as Marriott, Hilton. These brand names are much bigger and much more well known by the customers. So when you use others' name, you also use their logo, identity, marketing materials, reservation systems, and so on. You use a lot of things from the franchisor. So for this reason, you have to pay a fee for this bigger brand. Commonly, the franchise fee is about 10 to 15% of the total rooms revenue. So here is the basic structure of a franchise fee. A franchise fee is consisted of the initial fee and continuing fee. Now let's take a look. Okay, initial fee. Initial fee usually has two components. One is the minimum dollars amount. Another one is the additional amount calculated by based on the hotel's rooms count. But in this example, the initial fee includes a minimum fee of $45,000 plus $300 per room for each room over 150. Right? So that's the basic structure for the initial fee. Now let's take a look at the continuing fee. So continuing fee is more complex. Okay, it usually includes 4 different components. So when you calculate the continuing fee, it is very, very important to use the correct base when you're calculating each component of the continuing fees. So for example, the royalty fee. Royalty fee is calculated based on a percentage of total rooms revenue. The advertising and marketing fee is also calculated based on a percentage of total rooms revenue. So when you're calculating the reservation fee, sometimes based on the different contract, the reservation fee is calculated by using either a percentage of rooms revenue or a fixed amount of dollars per available room. Okay, here is a slightly difference here. However, when you calculate the frequent traveler fee, the frequent traveler fee is calculated based on the percentage of the total hotel revenue. Okay, that's very important. It's calculated based on the total revenue rather than the rooms revenue. So it is very important for you to choose the correct base when you are calculating the continuing fee. Management fee. A lot of hotels, they are not only not operating under their own name, instead they are using others' brand name. They also do not operate it by themselves. Instead, they are hiring the management company to manage their hotels. So when they hire management companies, they have to pay a management fee for them to operate their own hotels. A management fee has two components. One is called base fees, another one is intensive fees. So base fee and intensive fee, what are they? Base fee is calculated by using a percentage of total revenue. Intensive fee is calculated by using a different base. It is calculated by using the net income. So be careful here. So when you do your homework or calculations, please use the correct base to calculate each fee. So when we take a look at the total revenue, right? When we calculate the fee based on the total revenue, it is more safe for a management team because a hotel must make total revenue, right? But a hotel may not be able to make a positive net income. So for this reason, the management team, they prefer more about the base fee because it is more safe for them. They can get the fee, they can get their money anyway, right? The hotel owners, they prefer more about the intensive fee because intensive fee encourage the management team to make more profit. So nowadays, the most popular fee structure is called combination fee, which includes both base fee and intensive fee. So it not only provides the management team a safety fee they can get, it also encourages them to make more profit. So I believe in this coronavirus season, a lot of hotel managers, hotel management teams, they may not be able to get the intensive fee, right? Because we don't have enough travelers for a hotel. But fortunately, they can still get their management portion based on the base fee. All right. Thank you all for watching this video. I hope this video is helpful, and see you in the next video.